Imagine inheriting a retirement account worth hundreds of thousands of dollars, only to lose a huge portion of it to taxes because of one mistake. It happens more often than you think. Today, I'm going to walk through strategies that can help you manage an inherited retirement account without triggering massive immediate tax liabilities, so the money can continue working for you instead of disappearing to taxes. If you're new here, my name is Leah Woodley, a certified financial planner and enrolled agent, and I help people make smarter financial decisions so they can live with greater clarity and confidence. One situation that creates a lot of confusion is inheriting a retirement account, especially an IRA or 401k. Many beneficiaries assume they have to withdraw the entire account immediately. That decision can trigger a massive tax bill and destroy years of potential growth. But in many cases, there's a much smarter approach. Let's say you inherit a $400,000 traditional IRA. If you withdraw the entire amount in 1 year, that $400,000 is typically treated as ordinary income. That could assumably push you into a much higher tax bracket, possibly trigger tens of thousands in taxes, or potentially reduce the long-term value of the inheritance dramatically. Instead of thinking about this money as set in cash, you should think about it as a long-term financial asset that still has the ability to grow. This mindset will help you to avoid the liquidation trap. For most non-spouse beneficiaries today, inherited retirement accounts fall under what's called the 10-year rule. This means the account must generally be fully distributed by the end of the 10th year after the original owner's death. The key detail many people miss, once again, is you don't have to take it all at once. Instead, you can strategically spread distributions over time. This allows you to manage your tax bracket each year, preserve more of the account's growth potential, and reduce the impact of taxes on the inheritance. This transforms the account from a tax burden into a long-term planning opportunity. If the decedent was already taking required minimum distributions, then you too will have to take those distributions. Instead of withdrawing everything at once, many beneficiaries benefit from strategic distribution planning. For example, you might take smaller withdrawals each year to stay within a lower tax bracket, withdraw more during years when your income is lower, or allow the rest of the account to continue growing tax deferred. This approach spreads the tax impact across multiple years rather than concentrating it in one painful event. It also allows the principal to keep compounding, which can significantly increase the long-term value of the inheritance. One of the most powerful strategies is simply being intentional about timing. For example, if you expect your income to drop in a future year, maybe due to retirement, a career change, or taking time off, those could be ideal years to take larger distributions. On the other hand, if you're currently in your peak earning years, it may make sense to minimize withdrawals early and allow the account to grow. Tax planning around inherited retirement accounts isn't just about the rules. It's about aligning those rules with your personal financial timeline. When handled properly, an inherited retirement account can become something much bigger than a lump sum of money. Instead of being quickly drained by taxes, it can become a long-term income supplement, a funding source for major life goals, or even a multi-generational financial legacy. Shift your mindset from how quickly can I access this money to how strategically can I distribute this money to improve my quality of life and achieve my life's goals. That shift alone can preserve a tremendous amount of wealth. If you inherited a retirement account or think you might in the future, taking a few minutes to understand the rules and how to strategically distribute that income can potentially save you tens of thousands of dollars in taxes. If you found this helpful, make sure to like this video and subscribe for more financial planning insights. And if you want help building a strategy around inherited assets, retirement planning, or tax-efficient investing, feel free to connect with us. Thanks for watching.